Good morning, traders and investors. My name is Roger Scott, and I'm the senior strategist for Wealth Press. At least I was the last time I checked. Today's Wednesday. It's October 19th. It's about 8 a.m. The market's going to open up in exactly 90 minutes. Look at that. Easy math for me today, even numbers. And as you can see here, the market's down just a little bit. Now, don't get too worried. Don't get your anxiety up. This is not really a big move. This is really random. There's a good chance this rally will continue if the earnings are continuously better than expected, which is what we've been seeing. Now, remember, folks, earnings are not good, but they're better than expected, which is key. Now, one of the reasons we had a good rally yesterday was also because of industrial production. The report came out on the upper end of the scale. Look at this. All the numbers were really great. So that did not hurt us at all. And usually industrial production isn't that great in the middle of a mild recession, which is exactly where we're at right now. The big news today is going to be housing starts and permits. I am not expecting a really good number. I would be surprised if the number was really good. The consensus is 1.475. We're in a fairly reasonable range. But honestly, I don't think this number is going to impact the economy as much as a lot of people think, because I believe everyone's expecting the housing market to soften, and I believe that's reflected in the price because interest rates are going up, and you're not going to get a crazy hot housing market in light of raised rates. Especially the 2-year rate, which has been going up. I mean, I think mortgages right now went from like 4% to 6.5% just in the last 6-7 months. So don't expect this number to stay up. But I don't think housing starts right now are going to mess us up. And then tomorrow we've got jobless claims and manufacturing index, which is going to be a really big report, and then existing home sales. I would say unless the jobless claims is out of whack tomorrow, this is going to be a nothing burger because the numbers have been right around 220,000. They're going up a little bit. Nothing to worry about. They're not, skyrocketing or anything like that. As you can see here, consensus 235. The week average is 211, going up a little bit. But honestly, if it's 280, that's something for the Fed may take into account. But if it's around 235, 240, 230, 228, this is the expected range. So again, they're expecting a higher jobless number. But if we start getting to 300,000, 350, we're going to have an issue with that. So something to keep an eye, a potential issue to keep an eye on. Now, volatility, as I mentioned, still is going down, and it looks like it peaked out right here, and markets are grossly oversold. Now, put the call ratio, which I haven't looked at, is still above or 96, so we're still within that range. We haven't dropped lower, which means there's a huge ratio of put buyers or put traders versus call traders, and most of these put buyers are buyers, not sellers of puts. So the ratio of market inflexibility in terms of what's controlling is definitely to the put side. So there's definitely controlling interest in puts versus calls, which means we have a lot more upside firepower to go. If you look at momentum levels, and I like to look at this, a lot of people like this. This is the number of stocks making 20-day breakouts versus 20-day breakdowns. You could see here the number, even yesterday, when we rallied, the number only got to about 135. A real strong rally, like a rally that's going to, taking us by force, 550, 600 stocks, 525. So we're not there. This is still randomness. And as you can see here, we're not seeing major breakouts yet from any stocks. So we have a lot of upside to go before we even out, like a lot of upside. And if you look at momentum levels, they will confirm that. I mean, things are not looking that great. 24%, 21%, 20%, 18%. Now, energy's looking great. I told you that it would, by the way. Financials are starting to look better. Healthcare is starting to look better. Industrial, but only in the short term. It hasn't spilled into the 50-day moving average. And again, look at utilities, 7%, 10%. Real estate, 3%. This is not a major rally. So if you want to get some perspective of how far up we are, we're just in here. We haven't gotten anywhere here. We're just beginning to break out. There's a lot of upside potential left right now. Potential. So if we do rally, we can go quite a bit. As I said, momentum levels, the firepower is pretty dry right now. So let's talk a little bit about global economy. And then I'll get into some individual stocks because why? Well, today is, what's today? Today's Wednesday, where I give you a hot long trade and a hot short trade. Let's see here. Where is my global news? I think I might have closed my news a little bit here prematurely. Let me get there for you, and I'll give you the top stories. 1 second. Let me just get here. There's a couple of international things we need to pay attention to. Oh, there we go. It's still highlighted for me. How nice. I lost that page there. Okay, Wall Street rose on strong corporate profit reports. The yen stayed near a two-decade low, near 149 to the dollar. That's not good. That's very, very bad. We've been seeing positive earnings, Goldman Sachs, Lockheed Martin, even Netflix. Now remember, the expectations have been so beaten down that it's almost impossible not to beat them at this point. I mean, I was looking at Tesla yesterday, which is coming out later today. Look at this. This is what's baked into the market. Negative 46%. That's crazy, right? That's I mean, how do you not beat that? And yesterday, Netflix, they beat the report, but I mean, look at what they were expecting, down 33%. So it's hard not to beat these numbers. Let's go back to global economy, and then I'll go back to the earnings after that. Profit reports temporarily offset investors' worry that repeated interest rate hikes by U.S., Europe, Asia to control inflation that's a multi-decade high might tip global economy into a recession. Folks, we're in a recession. We've been in a recession for 2 quarters already. In energy markets, crude is gaining a little bit, not too much, 84 cents and 62 cents on the international market. Now, going back to earnings, really, really important. So far, the numbers have been better. Yesterday, we had Goldman Sachs. They were better. We had Lockheed Martin. They were better. I'm not sure about United Airlines, but overall, the sentiment has been better, not worse. Now, Tesla's coming out today, and let's take a little look at Tesla, see how it's looking. I don't even know if it's after or before the opening bell. I'm imagining it's after the opening bell, but Tesla's coming out today. And again, they're expecting negative 46%. 46%, a dollar they're expecting. I mean, this is a pretty mature company. Revenue expecting 61%, but not income. So that's a very, 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 very important distinction. Other stocks that are coming out with earnings today, and folks, you better be prepared. And I'll go through all the earnings that are coming out second half of the week, Thursday and Friday tomorrow, but I wanted to kind of get the first half of the week prepared for you. But as you could see here, either before or after the closing bell, you've got Abbott Labs, you've got Alcoa, you've got Comerica, bank stock, Equifax, very important stock right there. IBM, I'm not going to tell you how valuable that stock is. Procter & Gamble, Steel Dynamics, this is one of those stocks that we actually have in our portfolio. Travelers and Winnebago, what a company. Hard to believe they're still in business, but anyway. Travelers, so these are the companies. So far, the numbers have been better than expected. The markets have been rallying. Now, just to give you some ideas of levels here, I'm expecting the next level to be 377, 378. Let's just say 378 in the SPY. On the QQQ, we're looking at 282-ish. And on the Dow Jones, we're looking at right here 31,000. Let's just say 31,200. We're at 30,500 now. So if we can get up to the next hump, which is about 500 points above us, the next level from there is 32,400. So this next level is going to be very, 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 very crucial. Now, today is Wednesday, and you know what I do on Wednesdays? I give you a long trade and a short trade. Well, today I've got a little surprise for you. I've got something better for you. I want to show you how I pick some of these stocks and how sometimes you could pick stocks based on patterns and rhymes and reasons that'll tell you a story. So I want to show you something interesting. Look at this company right here. Let me go to my stock fetcher. Let me go to the 90-10 shorts here. Where's that company? TNL. There it is. Now, this is Travel and Leisure, TNL, right? Look at the profile of this stock here. Hotel, recreation, travel, leisure, provide membership leisure services. Company offers vacation experiences, right? So look at this stock, technically. Here, I want to show you this. Downtrend peaked in February of last year. Down, 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 down. Just keeps going down, right? But I want to show you something interesting. Look at Wyndham Hotels. And now look at this stock. Very, very similar. Very, very similar. Now look at Hilton. Now look at this travel and leisure. Look at Hilton. Do they look the same? And look at Wyndham. They don't look all that different. They all look like they're peaking out here. And the trend looks exactly the same. Exactly the same. 3 stock. HGV, Wyndham, and Travelers. Which one would you sell? Well, I would go with the one that has the highest RSI. Here it's 60. Here it's 72, which looks like it's almost ready to go. And here it's 61. So in this case, you would go with Wyndham because that has the highest RSI. But generally speaking, none of these stocks look really good. And look at Travelers and Hilton. They look exactly the same, and they look like they're bottom. They look like they're topping out. This rally doesn't look like it's for the birds. So any of these 3 short stocks, Hilton, Grand Vacations, Wyndham, or Travelers would work to the short side, and they look the same, and they all look like they're doing the same thing. And when you see 3 stocks that are in an identical sector doing the exact same thing, that's a pretty good sign that they're all going to move the same way. Usually travel stocks, leisure stocks, energy prices are still high. We may be going into a deeper recession. That's not a time for people to travel and go on holidays and leisure. And we're not in the summer. We're going away from the summer. And holidays, I don't know about this holiday, if it's going to be a really big one. So travel and leisure stocks, hotel stocks are not doing all that great right now. So to the downside, we've got TNL, WH, and HGV. Now to the upside, very, very simple. A couple of stocks that I've been talking about that are making new highs, that are looking really good. Look at Cardinal Health. Look at that congestion, that consolidation. That consolidation, folks, is ready to break higher. And it happens to be one of the top 5 stocks right now. So Cardinal Health to the upside, love, love, love this stock. The other 2, Marathon Oil, looks like it's consolidating right here. Looks like it's going to go higher. It's already above these levels. Or ConocoPhillips. And by the way, these stocks are in the top of the S&P 500 stocks. We recommended ConocoPhillips right here at 112. It went as high as 123. I'm liking it right now. Again, I think the stock is going to go higher. I think energies right now are a absolute no-brainer, and you need to own them in your portfolio. I really do. Now, before I let you go, like these longs, so I gave you 2 longs and 3 shorts. Pretty good, right? Now, folks, earnings season is here. And for new money crew Lance Ippolito, it's his favorite time of the year to trade. And today on Wednesday, October 19th, I wanted to say December just now, but it's October. He's expecting some big orders coming in from smart money on one specific stock. Why? Well, I'm glad you asked. Right after the market closed, the company's announcing its quarterly earnings. And if what executives are saying is true, this stock could move the entire market. Holy moly. I wonder if he's talking about Netflix or not. I don't know. The best opportunity to trade is going to be before the closing bell to capture potential insider and Wall Street whale buying going to big announcement. You don't want to miss it. Click the link below. Get all the details. And remember, like these videos, subscribe to this channel, post comments. I read them and I respond them, and I know who you are. I'm just messing around. Anyhow, post comments below this video. Give me some feedback. If you have questions, let me know. I'll answer them either below the video so others can read or during a next video. And I'll talk to you soon. You got to check out Lance and his hot stock. He's red hot. He's been on fire, and you got to check it out. I'll talk to you guys soon. Have a great Wednesday. Bye.